What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 9, April 20th, 2023. We made some trades today, so let's get into it. Okay, so coming into today, my goal has been the same as it's been all week, which is to only take trade setups that I'm familiar with. Because if I do it like this, I have a much higher probability of being successful and profitable. So let's take a look at what happened today. So let's start in the pre-market. In the pre-market, we were able to establish a bull channel using the low from 910 and connecting that to the low that started at the open from 930. So once we established that channel, I just used that as a reference point for my first trade of the day. So I went long at the bottom of a bull channel inside of an uptrend. Went long right here once I saw prices bounce up off of it and took prices back up to the top. So you remember yesterday, one of my biggest problems was had good entries, great trades, but I didn't take profit when I should have. So today I came in focused and I'm like, hey, if I get profit and it hits my target, I'm taking my scalps. So after this trade was ended, I had another chance to hop in on the long side when prices shot back down to the bottom of the channel. But because the momentum was so strong, I decided against it because yesterday when it was a bear spike on one candle that was so strong and so quick, I froze up and I ended up taking a loss. So in today's scenario, I decided to not even have an order down there at all and not to hop in when I saw prices spike back down there. Because in my opinion, I'm like, well, if they spike back down there, if it's anything like yesterday, it'll probably be another down leg coming, and that's exactly what happened. So after we spiked down from the top of the channel, we created a lower high, and from that point forward, we just trended all the way down until we made the low for the day up until that point at around 33,800. So notice what happened after that. We had a sharp reversal, a higher low got established, and then the uptrend continued for the majority of the session after that. So that's actually one of my favorite patterns. If you guys have been on the stream, then you know that I call it a downtrend reversal, higher low established. So let's go back to the folder one more time and take a look at that, because these setups happen multiple times per week, and I think it's very important to go over, because if you understand this setup, not only can you trade it, but you can also trade what comes before it, which is usually a strong downtrend, and you can also trade what comes after it, which is usually an uptrend for a good considerable amount of time. So let's look at the most recent examples that we have. Okay, let's see. So here's one, higher low, strong downtrend, strong reversal, higher low. We come back to retest that one on this occasion. But there are some occasions where we have a sharp reversal, we come back to make a higher low, and we don't come back to that higher low and test it. We just move up from that point and continue moving higher. So this is another example. This one is an example, and so is this one. So that's kind of similar to what I saw today. And actually, that's the live chart. Let's go back to my chart for today. There we go. So that's what I saw right here when this higher low got established. The only thing was I put my order somewhere around the lows of this swing, expecting it to come back and have a retest. But on some occasions, it makes that higher low and then it just moves on from there. And then you have to catch the next higher low at higher prices whenever that happens to be established. So I had my chance to enter right here, but I chose not to because I just didn't trust the fact that we bounced off the bottom of the channel and then pulled back. So I chose not to take that entry. I skipped that one. So then we eventually came back up to the top of the channel, and now that we got back into the channel, then we started respecting the channel once again. So we had bounce at the top, back down to the bottom. Now once we got back into the channel, that's when I took trades 2, 3, and 4, because my mindset was, now that we're back inside of the channel should hold up and it should be moving to the long side. It might take a minute or it might be quick, but either way, it should be moving to the upside. So that was my logic at trade 2 and trade 3. Only thing was I was a little bit hesitant and skeptical, and I closed my trades out way earlier than what my stop would have been. If I went long right here, as I did, and kept my stop the way it was, I wouldn't have got hit on my stop. I would have actually been able to take profits at the top of the consolidation, and that probably would have never led to trade 3. But that shoulda, coulda, woulda. Let's talk about what really happened. So 2 and 3, I was in too early, got scared, and closed them out for small losses both times. 2 small losses. So on trade 4, I went long at the bottom of the channel, all right? And then once the market moved up for me and it was up by more than 10 points, I moved my stop to break even. Since I'm only aiming for 22 points, once my trade gets halfway to that point, I move my stop up to break even to protect myself, because my line of thinking is that if it moves that much in my favor and then comes back, it's not something I really want to be in for much longer. So I respect my break even stops. Now I'm starting to learn that with channels, sometimes you got to keep your stop where it is and you can't move it up to break even, because if it's a channel is really a diagonal sloping consolidation zone. When you think about it, like, imagine if you took this whole consolidation and just kind of rotated it at an angle to make it flat like these are up here. So it's just a consolidation zone. So if you went long at the bottom of the zone, it's more likely than not that it's going to be multiple touches at the bottom of that zone before it moves up and moves higher. So I think in channels and consolidations, sometimes you might have to not move your stop up to break even and just accept that full risk that you have to take on that trade, because you don't want to choke your trade out and not give it room to breathe. You want to let it ride and be able to catch that move. So I'm not 100% sure that I'm going to stop respecting my break even. From this point, I would say I will still respect my break even, and I won't get back into that trade if the trade comes back to break even. But that's something that I want to research and kind of find out, because some rules apply to certain setups, but then they're different for other setups. Like, for instance, if this was a trending market like this one right here, where prices clearly moved up, now yeah, if they came back down here, you would definitely not want to take that long trade again, because in that timing period they're trending more than they are consolidating between a range. As opposed to down here, we were clearly in a range, just a diagonal channel range. So that's interesting. Now five is one of those losses where I'm not happy that I took it, but I'm not mad either, because it was simply just a mistake of interpretation of what exactly I was seeing. So I actually mistook the top of a channel for the bottom of a consolidation, because I'm thinking that once we broke out of the channel, we were going to start making a zone on top of that channel, and then prices continue up. So that was my logic. And then when you look at this area, we have 1, 2, 3, 4. So you could kind of maybe consider that a micro consolidation until we kind of really break it down. So let's look at it. We pushed up to the top of the channel. We broke out. We closed right here. But then on the next candle, we pulled back. So let's look at it. That's boom, 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 boom. That's really more of a double top. We came up here, first top, sold off. Second top, sold off. So I think that's just paying attention to details. Sometimes a consolidation range can look appealing, but when you really break it down candle by candle, you'll realize that it's not exactly what you think it is. So that was just a mistake on me right there at trade number 5. But I also took that same trade yesterday, if I'm not mistaken, where I thought prices were going to break out past the area and they actually didn't do it, which is one of my rules. You know, most breakouts have a tendency to fail. So if you're trading a breakout, if I'm trading a breakout, I want to make sure that it's really legit, because most of the time it's not, and it's better to just go long. Wherever your stop is, that's where your entry should be. So on trade 6, now all of the things I just told you, that all went through my mind between trades 5 and 6. So at trade 6, I was like, okay, if I know I went long in an uptrend at higher prices, well, if I have an opportunity to go long at lower prices, I'll do that. So I went long this prices bounce from a key volume candle from earlier. That key volume candle is this one right here. If we follow it down, we can see that this candle had the highest volume since, what, this is 1018, 1020ish. So in the past 10 minutes, within this whole entire process of the market moving back up into the channel, this candle right here had the highest volume, which tells us that the most business was done within that price range. So more than likely, if prices come back down there, they could find support. So that's what I was looking for at trade 6. Was able to get the long entry right there and took it back up to the top of structure. So then let's talk about trade 7. Now trade 7 was complete FOMO, fear of missing out. Because I looked at trade 6 and my line of thinking was, okay, I know that the 34,000 level above is a magnet. Whenever you get within 100 points of 1,000 level, the market is going to try and do everything it possibly can to get there. Now sometimes it makes this move up in a straight line and it's pretty simple, but then sometimes it'll make this move up. Like on this occasion, it came all the way back up to 980, and everybody think that, oh yeah, it's going to 34,000, but then it pulled back. So it'll be scenarios like that where it'll either be a spike that'll go straight there, or it'll pull back and play around and then eventually get there. But that was my line of thinking on trade 6 and on trade 7. So on trade 7, once I saw the market start taking off, I said, man, it's gonna run up without me, and I want to make sure that I'm in it. And that was definitely the wrong decision. But luckily, I only took a small loss on that. I closed it with a manual exit, because I clearly realized that I bought it at the top of the swing. That's just not recommended, as the notes say. Definitely not recommended. Buying at higher prices is just too unreliable to do it consistently and expect to make profits. That's what I've been learning over time. So just want to make sure that I keep that in the back of my head and apply that knowledge every time I think about going long at higher prices. Just don't do it. Don't do it. So that's the lesson right there. So let's move on to trade number 8. So on trade number 8, I went long after a strong breakout. Now, I made money, I made profits, but not what I should have made. At trade 8, if I went long right here, I already had this zone drawn up here before I took trade 8. So I know that I should have been able to get out at the top of the zone. But I was stubborn. I was like, you know what? If I went long at 60, what's the probability that it's just going to stop at the zone compared to it shooting through the zone and going up to 34,000? So here's what I learned also today. If you have a magnet level and you're trying to aim for that target to be hit, don't fall in love with the idea of prices going up to that level. You could have an inkling about what prices would do, but you still have to trade what's in front of you. Don't try and force it and say, oh, okay, this is where it's going. Because I had a level where it was clearly going. I should have took profit up there, and it cost me about 10 points. So I made profits on that trade, but 10 points less than what I could have had. And I think those are the little things that make a big difference at the end of a day, at the end of a week, and at the end of a month. So that's something that I definitely have to clean up. So let's talk about our next trade, trade number 9. Now trade number 9, I can't lie, I was a little bit frustrated from trade number 8. So I'm like, you know what, let me get back in and then just take it back up to the top of the zone. Well, that was a bad decision, because if we zoom in and take a closer look, I went long in the middle of the consolidation zone. That's something that I would advise myself and everybody else to never do. I feel like a range should only be traded 2 ways. You either go long from the bottom or you go short from the top, and that's it. If you take any entries in the middle of the range, you really are open to anything, because it could swing back up to the, if you were short, it could swing back down to the top, stop you out, and then keep going. Let's say you went long in the middle of a uptrend like I did, it could swing back down to the bottom and stop you out. So that was just a bonehead decision on my part. I'm not sure what I was thinking on that one. Just trying to move too fast. I was trying to revenge trade from trade number 8, and that led to a small loss at 9. So that's definitely not desirable for me. That's something I gotta clean up. So let's look at trade number 10. So I went long as the prices came back into the zone. Now up here, man, I don't know what it is about these zones when it's one of them on top of the other, a little bit higher. Because I had these same problems yesterday. Like let's go to yesterday's chart real quick. So this is from the 19th. We had a very similar setup where on trade 14, 15, I tried to go long in expectation of the zone holding, and then I took the exact same trade at trade number 15, trying to catch that move as prices come back into the zone. It didn't work. You look at 18 and you look at 19. 18 and 19 are almost an exact carbon copy of what we see today, where we push down to the bottom of the zone, we push back up to the upper zone, and I'm thinking that, oh, okay, we're about to come back up and test the top of the zone and then sell off. That's just not the case. Even though I feel like we're back into the zone, I have to look at where I'm buying. Right here, I bought at higher prices. If this was the start of the upswing, look at where I went long at. That's the top of it. So I ran into the similar situation today, but because the context was just slightly different, I thought that maybe it could be better for me this time. And it actually was better for me, because if we zoom in, look at what happened. I went long right here at the bottom of the zone. Prices came back to the top of the zone, and I chose not to sell it because I'm expecting for prices to go ahead and tag that 34,000 level. I went long. I think this price is about 34,072, 73 ish, and it came all the way up to about 86. So I said, if it's at 86, it's only 14 points away from 34,000. 14 points on the Dow Jones is really nothing. So in my mind, I'm thinking, oh, okay, it's gonna shoot up to 34,000 real quick, and then it's gonna reverse. But you gotta trade what's in front of you, man. I could have had two good trades from that zone, trade 8 and trade 10, and been able to avoid trade number 9. So it's just one trade could lead to you either missing opportunities on others or taking bad trades that's going to put you in a bigger hole. So every trade is important. You want to try and make sure that every trade is your best entry that you could possibly make at that moment. So that's something I got to work on for sure. And then let's talk about what happened after trade 10. So if we look at 8, 9, and 10, let's look at that whole entire area. What we really did was create a double top. It's not a traditional double top where it's just 2 points that clearly stick out and then the market reverses. Well, in this situation, it's more of a consolidation double top, but it's clear enough where we can circle this and we can circle this and say that, okay, that's the double top. And if we were unsure whether or not that was a double top, maybe some people could say, it's more of a consolidation. Okay, that's fair. But then once we pushed down and created this lower high, that was all the confirmation that we needed. So once I saw that lower high get created, I'm like, all right, the trend is now down for however long the downtrend wants to last. So we made this lower high, pushed back to the bottom of the zone, came back, retested the top of the zone, textbook right there. And then we pushed down back to the top of the channel, which is where I went short in expectations that prices would continue down. If not down back to this low, at least back down to the low where we entered at trade number 6, which eventually it did, but I wasn't able to participate in that move because I got stopped out. And let's actually read those trade notes. So on 11, I went short after a double top and a lower high being formed. My idea was correct, but the entry price and my stop location could have been much better. And I say that because if you look at my entry, look at where I entered. Let's zoom in a little bit. So right here, here's my entry, the orange triangle. I'm going short at the bottom of the swing. No matter how much I feel like, it's gonna keep going, it's gonna keep going, more than likely it's gonna pull back first and then keep going. So I think that I should have put my entry where my stop was. My stop was at the top of the zone because I'm thinking that once they push up to the zone to retest it here, they push back past it, and on candle 11 where I entered, they actually came back up to test the top of the zone. The wick touched right on top of it. So then I said, okay, that right there is the retest and it should be going down. But what it actually did was it came back, double tested that right there, and then moved down. So I think right here where I went wrong was that I modified my trade. This is not my normal stop loss. My stop loss normally based on what it should be, would have been at 48, which is just slightly below the top of the zone. Now, if I had my stop where it should have been, I would have been able to make profit. So I think that's just another little small detail, not modifying your stop loss or your profit target if your trade is legit. If you believe in it, then let it ride out. Don't be scared to take the loss. If you believe in your trade, you have to be willing to accept the risk that's going to come with it. So that was the last trade based on the screenshots that I have. But after I got off of the live session, I was able to catch one more move. So let's analyze that real quick, and then let's get into our final last thoughts and then call it a day. Okay, so this is that trade we were just talking about where my entry was a little bit subpar and my stop should have been at 48 where it originally was, and I would have never got stopped out. So we continue on, and then look what happened. We sold off, we did, but then we created a double bottom. So let's mark that up. We created double bottom right here, double bottom right here, and then we made a higher low not too shortly after that. Now that right there represents one of my favorite patterns, the one that we were just talking about from earlier. A downtrend reversal, higher low established, that leads to an uptrend for a pretty considerable amount of time. Now in this scenario, the uptrend wasn't really too far out extended. It came back up to that 960 level, which lined up with what used to be previous support, and then it sold off from that point. So I did a good job. Once I saw my setup, I said, okay, I know exactly what I'm looking at. Sometimes the reversal and the higher low would come back and test that level. So remember how when I showed you the charts from earlier, on some occasions we push straight up, and on some occasions we come back and retest it. So when we initially pushed up and made this first higher low right here, I was trying to get in on this candle, trying to catch that 25 level, but I wasn't able to get it at 925. And then when it came up to 931, I'm thinking to myself, it's probably about to be one of those scenarios where it doesn't come back and retest it and it just runs up. And that's exactly what happened. So I'm glad I was able to get in. Now with this trade, my theory behind it was, if we came all the way up to 980 and then we sold off back to 900 and then we created a higher low, to me that means that the market still wants to go up and test that 34,000 level. So my first initial thought was to just hold the trade for the rest of the session or until it hit 34,000. But then when prices got up to this candle right here at 1148 and they sold off strong like that, I was very concerned. Now on the next candle after that, they bounced right back, so I'm like, okay, that's cool. But we still can't ignore the fact that the sellers had enough momentum and enough confidence to come in and just push the market down like that. That means that even though the trend is strong, the sellers are still waiting on the sideline looking for the next best place to go short from. And that next best place didn't come too long after. It happened, that was at 1148. 4 minutes later, the sellers came right back in, and this time they were successful and were able to push the market all the way back down to retest this double bottom. So I'm glad that I was able to get out, because once I saw that prices peaked at 60, I'm like, okay, my original profit target was at 51, so I'll trail my stop up to 49. So that way if prices come back there, I'll be able to still catch some profit, but be able to leave the trade open if it doesn't come back to that level. So overall, I feel like that's what I should be doing on most of my trades, identifying a setup and scenario that I recognize and that I'm familiar with, and then trading it the proper way. I think what I've been doing today is I've traded some of my setups that I know, but I've traded them improperly. So it's not just about trading what you know, it's about trading what you know and trading it the right way. So I think that's something I could not easily clean up, but I could definitely clean it up with a little bit more work. So that's what I'm going to focus on tonight, focusing on identifying the setups, looking for what I know, and then trading it the right way, and managing my trade properly while I'm inside of the trade. So overall, man, I ended up making back some of the losses that I took, but I still ended up with a loss on the day. So I want to come back tomorrow refreshed with a lot of hard work put in tonight, and we want to end the week right tomorrow on day 10, April 21st. So I'll see you guys tomorrow at 9:30 sharp, and until then, take it easy.